First up, let's welcome now on the show our guest for today, Amit Kukreja, the founder of Amit Kukreja Advisories. Thank you so much for joining in today on the show, Amit. So to start with, it's the end of a financial year, FY21. I think most of us are done with our tax planning for FY21, or at least I hope that everybody is done with their tax planning for FY21. Before we close the financial year, are there any other tasks you recommend retail investors and individuals should complete as a prudent practice on personal finance basis before the end of every fiscal year?
See, I think your time is pretty much up for taking any actions for this financial year, but still there is some room. If you haven't done your ATC exemption, I think you still have some time to deposit your PPF for this financial year. You can make that deposit. But if you have already done it, then there's not much that you can do on the financial market side because the markets are closed. The NPS transaction cannot be recorded as of today. ELSS cannot be recorded as of today. You can try your luck with 5-year fixed deposit for ATC. You can try your luck with an online payment for your health insurance, which gets you deductions under Section 80D. So there are few things that you can still try, but don't pin up a lot of hopes given the close of business, almost the close of business as of now.
All right. So, NPS, ELSS may not happen today because, the banking hours have closed and, essentially the units as well won't be credited to you. If that doesn't happen, then you will not be able to claim the benefit under Section 80C. Now, a new fiscal year is a great year to, review your finances, see what you're doing right, see where you're going wrong. Amit, where do you recommend investors and individuals start off from?
See, we have learned a big lesson last year, the lesson of importance of contingency fund, and COVID taught us how much cash or savings in your cash account are important in terms of dealing with contingent times. And, we have this virus back attacking us, this time in a bigger form, in a more silent form, and in a more lethal form. So if you have not picked up your lesson of contingency fund last year, then it's time you picked it up now. Because with this whole new impact, we don't know if things are going to normalize anytime soon. We don't know whether this virus will be gone or we will have to learn to live with the virus. Until we get to that point where we are comfortable coexisting with this virus and we are comfortable building our business in a way which is resilient, which is not impacted because of the pandemic, we should have enough sufficiency of cash in our bank accounts. So contingency fund, build up your contingency fund. That's your primary step at the moment. A new financial year starting tomorrow. So focus on at least 6 to 9 months of contingency fund. If you were to rerun the same situation that you had to go through last year, who would bail you out this time? If it was money invested in real estate, you knew that real estate transaction could not be done. So you had to bank on financial assets. You had to bank on liquidity in your bank accounts, fixed deposits. So build your contingency fund. I think that will be the step 0 to live with confidence a new financial life, which is likely to be impacted by COVID again.
Well, yeah, I mean, I think that's the one lesson that a lot of us came away with, from the year 2020, and that is being ready for any kind of crisis, building a contingency fund, which does come quite handy at the time of, a pay cut or even worse, a job loss or major disruption to income. And I hope that this lesson is now going to be implemented by a lot of individuals as we kickstart a new financial year. Another thing to do is perhaps even look at your portfolio, review it, see what's doing well, see what's not doing well. But Amit, is it an exercise as simple as that okay, you simply discard those that have given you negative returns and then keep the ones that have given you positive returns, because this is also a year where we which has been ravaged and then of course subsequently recovered from COVID-19. So where do you recommend individuals start off from in their portfolio review process?
See, portfolio review process should be independent of what external events are happening, which could be high risk events. Your portfolio should anyways be reviewed annually. You should spend your time professionally with your financial planner or somebody who's guiding you. Sit with your spouse, have some thinking process established with her or with him, and then figure out what needs to change. Portfolio review is a regular recurring process annually. And if you have seen the market upside and downside within the same year, and 2020 was special because it not only showed us a severe crash, but it also showed us a massive rally, which was the shortest span in which you have seen a market turnaround in the history of probably 70, 80 years in financial markets. So if you had seen the market crashing and you have seen the market going back up, you must have learned to hold your nerves. You must have learned that if this happens again, our short-term goals are going to be severely risked. So you need to understand what is the risk element that you can live with. You need to understand what is the volatility in your portfolio that makes you sleep with peace at night. You need to understand what goals are going to be positively impacted if we have a holding period of 7-8 years, and what goals could be adversely impacted if we have a holding period for 2 or 3 years. So you need to spend time to understand your own temperament for investing. You need to spend time anyways every year to check the portfolio fulfillment process, whether it will help you achieve your goals. However, more important is that these kind of crashes and rallies might push you to have more frequent reviews, which is absolutely fine. If you feel like doing more frequent reviews, please do that with an expert. Please spend time with an expert who can guide you whether to stay in or pull out the money. But it is natural to have worries in these moments. It is natural to have the temptation to have more frequent reviews than an ordinary year where the market is, sideways or moving just 10-15% up or down. It's a trigger. If you feel like having a reviews more frequently, go for it. It is at the end of the day your money, and you would like to sleep with peace with your money, making sure it's working for you.
Okay, so firstly, a review has to be done regardless of what the external factors and events have been. Secondly, you must sit down at least once a year. More than once a year is more than welcome, but you have to sit down with your portfolio at least once a year, review everything, review what's going well for you, what's going wrong for you. All of that are just some of the actions that must be conducted by you when it comes to your investment portfolio. I think we have time for one last question before we take a break, and that I would like to take a look at on budget and savings. Just in terms of the way our lifestyle is, I think, of course, the last year was an aberration. We completely deviated from what we usually do, the activities we usually carry out in a day, which, of course, involve monetary spends. So how does one go about, and let's not forget, of course, there are also lifestyle changes because our money also may have been affected, our incomes have been affected. So how do you recommend one goes about resetting our budget goals, our saving goals for the new fiscal? Where would you recommend, individuals start off there?
So the big change we have witnessed last year is how is our standard of living changed? How much of a reliance we have built on technology? How much of, or what's the quality of devices or gadgets you would like to keep so that it makes it easy for you to work from home, right? So if you plan your budget accordingly, which essentially puts on priority the items that you need to ensure that you are able to keep yourself safe in a safe environment at home, in a restricted or restrained environment that protects you from COVID situation, you should go for that. So revisit your budget items, cut down your outing expenditure, cut down your travel, cut down your parties, cut down your get-togethers, but spend more on the quality of infrastructure you have at home to be able to be more productive or equally productive that you were in the pre-COVID times. So revisit your budget, figure out what is the new normal for you, what's the new standard of living, what's the new cost of living. Accordingly, prioritize your expenses, whether it's a laptop, iPad, telephones, for yourself, for children, whether you need a video conferencing facility at home, whether you need a super fast broadband connection at home, whether you need multiple phones, whether you need power backups, whether you need electronic gadgets that basically ensure that there is no outage in the internet modem when you're working. Make sure that you are working in a very efficient, seamless environment so that your salaries are not impacted, so that your ability to earn income, your jobs are not impacted. So I guess you'll have to prioritize what is it that makes you become equally effective and productive from home, and then accordingly put your expenses. Cut down your expenses on travel, cut down your expenses on outings, cut down your expenses on get-togethers. If there is a constraint, if there is no constraint, of course, it's your way of living the life the way you want to live it. But if it comes to a constrained adjustments, prioritize your office, prioritize kids' school over your, I would say, splurge expenses or expenses of outing and travel and get-togethers.
So anything that basically will augment or rather enhance your income earning abilities, that's an investment worth making, according to Amit. You know what? I think it's time for a very short break. Amit requests you to stay on with us. And ladies and gentlemen, after this break, we'll be addressing the questions and queries that you guys have sent us. And for those who are interested in talking to Amit, email us on themoneyshow@etnow.tv. We'll get your question answered.